This is the day we look forward to, Wednesday, because we get to have Mike on the money.
You're so
Interest
kind.
rate, I know, it's a happy time of the week. And we've got so many things to ask you about. Interest rates are in focus. The Federal Reserve met today. They chose to hold rates steady. The rate to borrow short term remains above 3.5%. So we welcome financial expert Mike Giordano with Williams Wealth Management to just kind of look at all of this and what it means for your money. So Mike, first question is, did the Fed's action surprise you at all? Is this what you thought they would do?
Well, the holding rates steady, that wasn't a surprise. Markets were expecting the Fed to hold rates steady. I think the surprise was that the Fed was saying that even though they held rates steady, they think the kind of growth could be a little bit better, not only for this year, but for subsequent years into the future. And that could be partially a read into AI maybe, you know, adding some productivity into the economy. So that was a bit of a surprise. The other big surprise was that Jerome Powell, the Federal Reserve Chairman, basically said that he's not going to leave the board until there's this investigation into his testimony is resolved. And so even though he's supposed to be done as chairman in May, if they haven't announced a successor yet, or approved a successor, I should say, from the Senate, then he'll just stay on longer. And that was kind of newsworthy.
Okay, does that give the markets a little more confidence?
Well, yeah, it could give it some confidence, but it could create more uncertainty because you don't really know, like, okay, is this going to be a Fed that's led by Powell, or is it going to be a Fed led by Kevin Warsh, and they may have different viewpoints.
So, of course, we look around the world, Mike, and it seems like anything and everything might affect the markets. The war in Iran, what kind of impact, if any, has that had on the Fed's decision to keep rates the same?
Yeah,
Do they look at that?
Yeah, they definitely are paying attention to what's happening in the war in Iran. And as Powell said today, it's hard to know exactly how long this is going to play out, right? But he did say, hey, you know what? We've now got another big inflationary issue to worry about. We had tariffs last year. We had, you know, all the pandemic-related stuff and the stimulus and all that. And so not saying that, you know, inflation is going to get that high like we got post-pandemic, but basically, it's something that the Fed does have to pay attention to, does have to worry about. At the end of the day, as I heard somebody say about an hour ago, the Fed can print money. They cannot print barrels of oil. And so as long as that oil is getting stuck there in the Middle East, it could create problems.
Yeah, so many factors to consider. What about the mortgage rates? Because that's one thing that really affects so many of our viewers. We've seen those pop higher in recent weeks. Is there some driving force behind that?
Yeah, as we talk about all the time, Jane, basically, the mortgage rates are pegging off of what's happening with the 10-year Treasury. And the 10-year Treasury has been floating high. We got just under 4% there for about half a second, and then it went back the other way. And this oil situation is driving up the price of oil. That's driving up fears of inflation. That's driving up the 10-year Treasury, and that's flowing into mortgage rates.
And finally, the markets have wobbled just a little bit, but they're less than 5% off their highs. What does that tell you?
Yeah, it tells me, right, to this point, it says, hey, the Fed is, or I should say the investors are feeling like they can maybe see through some of this stuff, that maybe the war won't last as long as we think it might last. Maybe, you know, we can kind of almost look past it a little bit. Today, notwithstanding, the markets fell over 1% today. There's, you know, Powell basically said, hey, inflation could be here a little bit longer than we expect. It could start feeding into people's psyches, and that's the real problem, is if we all start feeling like inflation is going higher, then we all start operating a little bit differently. And so it'll be interesting to see from this point forward how the markets react. But so far, they've been pretty, I would say, relatively calm given all of the uncertainty that's happening.
Yeah. Mike Giordano, thank you
Absolutely.
for just taking all those pieces and pulling them together to make
There's a lot
sense.
happening in the world.
There is a lot happening.
Yes.
Chris?